Welcome to The Explainer. Today we're diving into one of the most dramatic, high-stakes, and wildly volatile periods in modern financial history. We're talking about a time when overnight millionaires were minted out of thin air, and literally in the same breath, entire life savings were completely wiped out just as fast. It was an absolute era of unchecked ambition and, unfortunately, devastating deception.
Okay, let's dive into this. For our analysis today, we're pulling straight from Ethan J. Monroe's incredible book, The ICO Boom and Bubble, Unraveling the Tangled Web. This is the second installment in his Rug Pulls Unveiled series, and wow, it serves as a gritty, deeply investigative look into the illusions of legitimacy that really defined early crypto. Monroe completely pulls back the curtain on how these digital illusions were engineered and the massive human costs they left in their wake. Here's our roadmap for today. We'll be covering 1. The ICO Gold Rush, 2. The Web of Deception, 3. The Spectacular Crashes, 4. The Devastating Aftermath, 5. Rebuilding Trust, and finally, number 6, A Maturing Future. All right, Part 1. The ICO Gold Rush, Promises of a Decentralized Future.
So let's wind the clock back a bit to the early days of the crypto revolution. The excitement back then was just electric. But you gotta ask, what exactly drove this mania? Well, it was a total paradigm shift. Startups suddenly realized, hey, we can bypass traditional venture capital and banks entirely. All of a sudden, anyone with a bold vision, or honestly, just a really flashy website, could take their pitch directly to a global audience, promising to decentralize basically every single industry on Earth. And this brilliantly illustrates how the psychological drivers here were just a perfect storm. You had this massive gold rush mentality colliding head-on with severe FOMO, the fear of missing out. Everyday investors were literally watching early adopters on social media post about becoming overnight millionaires. Throw in some highly technical, grandiose promises all wrapped up in slick white papers, and you basically had the ultimate recipe for a global financial frenzy. Now, to make sure we're all on the exact same page here, let's clearly define our core concept. An initial coin offering, or ICO, is a fundraising method where a project sells its brand new cryptocurrency tokens to investors way before they're ever listed on public exchanges. The fundamental hook here, it was the promise of future value appreciation. The pitch was simple. You buy the token for pennies today to fund the project with the absolute belief that when the platform finally launches, that token is going to be worth dollars. Moving on to Part 2, the Web of Deception. Illusions of legitimacy. Now, as with literally any gold rush in history, malicious actors quickly followed the money. And these scammers, they became absolute masters at crafting illusions. They'd create completely fake executive profiles using basic stock photos. They'd heavily plagiarize white papers just to sound brilliant, and they'd fabricate media coverage to build up all this hype. But when you look behind the curtain, just grim reality. There was zero actual code being written. Their sole purpose was to gather millions of dollars, completely vanish, and leave investors holding a bag of worthless digital air. Which brings us to Part 3, the spectacular crashes from boom to bust. This leads us right into the inevitable collapse. The timeline of a typical ICO scam was terrifyingly fast. I mean, think about this pacing. Week 1, tokenomics hype and FOMO hit absolute peak levels. Week 2, millions of dollars pouring globally with zero oversight. Month 1, the founders suddenly abandon the project and all their social media goes completely dark. And by month 2, the token value plummets straight to zero and fortunes are lost in the blink of an eye. If you find this analysis valuable, please like and subscribe to Knowledge Lighthouse to help us bring more truths to light. So the crucial point is understanding the specific term the crypto community coined for this exact nightmare: the rug pull. A rug pull is a highly deceptive maneuver where organizers abruptly abandon all their promises, literally pulling the rug right out from under their backers, and taking all the investors' funds with them. It truly became the defining mechanism of fraud during this whole era. Let's turn to Part 4, the devastating aftermath, financial and emotional toll. When these projects collapsed, the fallout wasn't just red numbers on a trading screen. The real-world human cost was immense. As Ethan J. Monroe so powerfully puts it, investing in ICOs wasn't merely a financial decision. It was an emotional investment in a vision of a better future. When these dreams shattered, so did the emotional connections. Victims faced intense self-blame, deep embarrassment, and shattered trust within their own personal and professional circles. It was truly devastating. All right, Part 5, Rebuilding Trust and Regulation. The Industry Responds.
Let's move to and see how this builds. Out of all this darkness, the crypto community and global regulators basically had a massive wake-up call. They recognized that for this tech to survive at all, massive changes were required, like immediately. This sparked a brand new era of accountability through strict, enhanced due diligence protocols. Step 1. Independent audits. You couldn't just blindly trust a slick white paper anymore. External experts actually had to verify the claims. Step 2. Mandatory transparency. Literally forcing developers to publicly show their code. And Step 3. A harsh but very necessary pivot toward actual regulatory compliance to protect future investors.
It's actually fascinating to see how differently global governments reacted to this crisis. The USA stepped in heavily, using the traditional Howey test to treat a lot of these tokens as highly regulated securities. China, they took the nuclear option, just a complete blanket ban on token sales entirely, which ended up forcing a lot of projects offshore. Meanwhile, Switzerland played it incredibly smart. They established Crypto Valley guidelines, effectively creating a safe, regulated haven to attract legitimate innovators while keeping the bad actors out.
And finally, Part 6, a maturing crypto future. Lessons learned.
All of this incredibly painful history really forced the industry to grow up. The Wild West era simply had to end, and it paved the way for a much more sophisticated landscape. Today's post-ICO environment is defined by a massive pivot away from pure speculative hype and towards requiring actual real-world utility. We've seen the rise of major institutional integration, way more enhanced community governance, so you don't just have one anonymous founder holding all the power, and above all, an absolute demand for verifiable transparency before a single dollar is ever invested. So, what does this all mean for us today? We are left with a vital, lingering question. Has the modern crypto landscape truly learned its lesson, or does the ghost of the ICO boom still haunt our new tech trends? It's a question we absolutely must continuously ask ourselves whenever we're evaluating the next big tech wave. And honestly, there is a profound value in having this complete history right on your bookshelf to reference. For the complete deep dive, own the paperback. Get your high-quality paperback edition on Amazon via the link in the description. Add it to your collection today. Please share this video and check the description for more.